Well, great to see you, Vishal. Congratulations on being named the CEO of Zerodha Fund House. Now, tell me, why did Zerodha tap you? What is your experience in passive markets?
I mean, I've been, in passive mutual funds now since day one. I started off my career in CRISIL, where I was part of the index division. Post which, that company got hived off into a joint venture between NSE and CRISIL, where we launched the Nifty indices and we set up India's first index company, which was called India Index Services and Products Limited, which today has been rechristened as NSE Indices. So that is something which I was involved in, right from the day it started, in the year 1998. Post that, I met a good bunch of forward-looking guys who wanted to set up the first ETF in India. And that's how I joined them. And we launched Benchmark Mutual Fund. And, you may be aware that Benchmark has been a pioneer, whether it's equity ETFs, debt ETFs, gold ETFs. We had been pioneers in India and launched all the first ETFs which were there, in the Indian market, since the last 20 years. Today as well, when you look at those ETFs, they're the most liquid and the most popular ETFs that are there in the Indian market. And therefore, I've had a passive journey, a passive investing journey right from, the time Benchmark Mutual Fund was set up in the year 2000 till when I left, Nippon in the year 2021. So I've been in this industry now for nearly about 22 years, just doing, passive funds.
So is it fair to say that nobody in India knows more about passive funds than you do?
I mean, that's a fair point.
That's a good one. Now tell me, Zerodha sort of is what, the 45th, 46th fund house. Why did they sort of launch a mutual fund at all? What were the problems that you're seeing in the market?
I think one of the big, problems that we felt, or I wouldn't say problems that we felt, or I would say that a place where we felt we could add value was when we looked at the number of investors. I mean, when you look at even, say, the mutual fund industry, today you're talking about having about 4 crore unique PAN folios in the Indian market in a population of 140 crores. So you're talking about a mutual fund penetration of nearly 2.5% to 3% or so, which in our opinion is low, is fairly low at this point of time. And I think when you look at Zerodha as an organization, they've worked constantly towards seeing how more and more retail investors can participate in the capital markets directly or indirectly. And I think keeping that in mind, I think we decided that, a mutual fund route to reach out to investors would be the next best thing, for us to do. The big, thing that we kept feeling, thinking about is that, what is it that we need to do to get more and more people to start investing in mutual funds? And I think, every time we kept thinking about it, there's one thing that kept coming back to our mind is simplicity, right? And we felt that if we need to get the next, say 10 million investors to invest in mutual funds, the underlying thing has to be that the products have to be extremely simple. People have to understand those products. And that's why we decided that, when we launch Zerodha Fund House, we will do only passive products because they're the simplest products to understand. They're transparent, they're cost effective, and they're extremely versatile. I mean, they can fit into any investor's portfolio, based on that investor's risk profile.
Okay, so you're basically focusing on simplicity rather than the fact that passive funds outperform active funds, because that seems to be the sort of common narrative. Is that your focus? I mean, is it because active funds don't outperform the index?
Well, I don't think it's anything, to do with an active-passive debate or whether this works or that works. I think investors should have both in their portfolios. Each investor can kind of decide, what portion of his portfolio can be active and what portion should be, passive. From our perspective, we believe that if we have to expand this investor base, I mean, in a population of 140 crore, I mean, we should be having at least 50, 60 crore investors investing into financial products. Otherwise, how are we going to grow as a country? Now, if we have to get another 40, 50 crore investors into mutual funds, into financial products, they have to be simple. And for us, the only way that can happen is through simple products. When I say that, look, here is a product, these are the top 100 companies in India, it's very easy for someone to understand. And it's very easy for someone to track.
I've seen ads where index funds are advertised as low risk, implying that active funds are high risk. What do you say to that?
No, I don't think that's the right argument, because at the end of the day, whether it's active or passive, I mean, if it's an equity fund, it will carry similar risk, right? The only difference being that an active fund possibly charges a much higher expense ratio in the quest that that particular fund manager will beat the index that he's tracking. No one knows if that's going to be true or not, and therefore it makes sense for an investor to just buy a simple index fund. I think when it comes to risk, I don't think there's a difference between the two, because equity, because one has to look at the fact that the risk actually comes from the asset class that you're investing in.
Exactly. So their exposure to equities is more important rather than whether they go active or passive. Right?
That's correct. That's correct.
As a fund house, you're ready to launch your first product, and it was interesting to see that you didn't choose the Nifty as your index. You chose something else. What index did you choose and why?
So we've chosen the Nifty, LargeMidcap 250 index. Now, it's a very unique kind of an index. I mean, when we started looking at the various indices that were there in the market, the thing that came to our mind is that we should be able to give a product, through which investors could continuously keep investing in, and also be able to benefit from the long-term India growth story. It had to be a mix between, stability as well as growth. Luckily this index kind of fit all those various bells and whistles that, we felt would be good for investors to invest in. So some of the unique features about the index is the fact that it invests 50% in large caps and 50% in mid caps. And every quarter that index gets reset. Now, a normal index, that means a normal market cap weighted index, would typically have about 85% in large cap and 15% in mid cap, right? And therefore, even if mid caps, over the next 4-5 years showed a decent amount of growth when you compare it to large caps, that index still wouldn't, kind of show a much higher return than, say, a pure large cap index, right? The benefit of this index being that a large chunk of money is going into mid caps. And at the same time, you have large caps over there as well, which kind of gives stability. So it's a good mix of a large cap and mid cap mix.
So it's perfect for someone who wants to set and forget for a long term.
That's right. And that's the entire objective of launching a product like this, that people can just keep investing in this product in perpetuity.
With index funds, you hear that tracking error is very important. What sort of tracking errors do you expect for this product?
I mean, because we're investing, say, in the top 250 companies in India, I don't believe that, the tracking error of this fund will be very high, because when you look at liquidity in the Indian markets today, I mean, you're talking about, the large cap and mid cap segments together trading approximately about 45,000 crores a day. There's a lot of liquidity in these stocks, on a day-to-day basis. So the stocks that we're investing in are, extremely liquid stocks, and we don't anticipate that the tracking error of this fund will be too high.
And it's going to be a direct plan only.
That's correct.
So it should be available where all good direct plans are sold, right?
That's correct, because we want, as a fund house, we want to have a direct connect with the investors. So we're a, completely direct to investor kind of a brand. We will be there on all the digital platforms, that are available, whether it's Coin or Grow or ET Money or any of these platforms which are there. We'll be available on all these platforms for investors to invest through.
Great. Thank you very much.
Thanks a lot.
Thank you.
Thank you. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.